Is it possible to get a high dollar disability policy as a fellow, or is it simply based on your income? I think what he's asking is, can I get a $20,000 a month benefit while I'm in fellowship only making $5,000 or $6,000 a month?
No, you can't. So as a resident, your limit is capped at $5,000 a month. As a graduating resident, you could utilize your contract within the last 90 days of graduation in order to get a much higher benefit. As a fellow, you would be entitled to $7,500 a month of coverage, no questions asked. Now, mind you, this benefit is tax-free. So $7,500 a month is, almost close to $80,000, $85,000 a year tax-free, which is considerably more than what residents and fellows make. A fellow can get more coverage if they're moonlighting. So I just did a policy on an interventional cardiologist, and the guy made $250,000 last year, moonlighting and doing his fellowship. And I was easily able to get him a $10,000 a month policy based off of his earnings. But traditionally, for a fellow that is not moonlighting, it'd be difficult to get coverage more than $7,500 a month unless you were within the 90 days of graduating.
Okay. Another question from him is, can you get a specialty-specific policy, such as interventional cardiology, before you graduate fellowship? And can you explain how that works when you buy a true own occupation policy as a resident?
Absolutely. So let me kind of go back a little bit. So let's say you purchased a policy as a med student. Then you became an internal med resident, then you become a cardiology fellow, then you did your interventional cardiology. That disability policy will automatically follow the progression in your career. So the way an insurance company establishes your own occupation is they look at what you were practicing 12 months prior to claim. So you don't need to call me and notify me, hey, Bob, I'm an internal med resident now. Hey, Bob, I'm a diagnostic radiology fellow now. I'm a diagnostic cardiology fellow now. Now I'm an interventional cardiology fellow. The contract automatically assumes the progression in your career. Own occupation for an interventional cardiologist, quite frankly, implies your ability to do your cardiac procedures is your own occupation, because my assumption is that your procedure billing is significantly more than your clinical billing. And so if a majority of your billing is coming from a result of interventional procedures and you lose that ability, almost any true own occupation policy would consider you totally disabled, allowing you to work in a clinical capacity or practicing some other form of medicine, and still collecting the full benefit. That's the beauty of a true own occupation policy for an interventionalist, a proceduralist, a surgeon, for example.
So basically, when they sell it to you priced according to what your occupation is at the time they sell it to you.
Correct.
But when they pay it out in the event that you get disabled, it's all about what your occupation is just before you get disabled.
That is correct. So a lot of times we'll get someone who is in the PGY3 going into PGY4 of diagnostic cardiology fellowship, and they'll tell us, Bob, I intend to become an interventional cardiologist or an electrophysiologist or do a structural heart fellowship. And I tell them, well, you're in luck, because your rates that of a internal medicine doc are lower than an interventional cardiologist. So lock it in as an internal medicine resident, and you will still be covered as an interventional cardiologist as you progress in your career. So you're absolutely right. The pricing is set when you apply. And based on your classification is set based on when you apply. But as you progress in your career, that policy will continue to progress with you.
Okay, very well. And he's got one more question. And this is about a non-true ONOC policy. And he's asking, do you get less disability payment if you're able to work as a physician with a non-own occupation policy?
So to answer your question very technically, most of your private disability insurance companies will not allow a physician to get a non-own occupation policy.
Interesting.
Yes. So Guardian, for example, bakes their own occupation into the contract. Emeritus, for example, wraps their own occupation with their enhanced residual rider. And for physicians, you can't get the policy without those two riders. Principal, on the other hand, sells their regular occupation rider as an add-on. Standard does the same. So it depends on the company that you end up with, but in all likeliness, you will end up, if you have a private policy, it will be an own occupation policy. But let's say you're in that 1% that purchased a principal policy and did not get a own occupation rider. All that means is that you're disabled as an interventional cardiologist, but anything else you do will compromise that benefits value. Depending on what you're earning, they will adjust the value of your claim. And you could be working as a greeter in Walmart, or you could be doing clinical cardiology, or you could be doing telemedicine. Every dollar you earn will compromise a dollar of benefit in a non-own occupation policy.
All right. So let's say you're working as an interventional cardiologist, you get disabled. Now you can only practice regular cardiology. But in that case, you would still get paid out because your own occupation would be interventional cardiologist.
Well, that's a very interesting question. The technical answer to that question is it would depend on what your CPT billing looked like before you filed the claim. So if you're an interventional cardiologist, but you're billing only 20% from interventions, then you would not be considered as an interventional cardiology own occupation. But if you're billing 60, 70% on interventional procedures, and you lose that ability as a result of an essential tremor, and now you've lost a source of almost 70% of your CPT billing, you would be considered totally disabled, even if you were working as a clinical or a diagnostic cardiologist. So it really goes by individual situations, pertaining to the claimant, as to what they were practicing, how much they were practicing before they filed the claim. And that's a moving target, because depending on where you are, and depending on what you're in your practice and the makeup of your practice, you could be doing, I've met cardiologists that just all they do is procedures. And then I've met interventional cardiologists that are kind of 50-50. They do procedures and they're diagnostic. So it really depends on the makeup of your practice before you file the claim.
The hosts of the YQA Investor Podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.